You've probably noticed something. Since you've been getting a little bit of experience trading, you've noticed that it's really a pain in the ass to try to just enter anywhere on the chart, buying or selling with just some random position size, because there's really no predictability, there's no sustainability, there's no consistency, and there's certainly in most cases not profitability. So you come up with a bright idea, a special idea. And that idea is to make some trading rules that you're going to rigidly stick to. It's going to be nice. It's going to be predictable. It's going to be black and white. You're going to do the same thing every time. You know you'll have wins, you know you'll have losses, and you're just going to let the stats and the metrics play out. I've been trading for almost 8 years. I've made millions of dollars trading Forex, crypto, and stocks, and I'm here to tell you that in my personal opinion, not financial advice, I think that's a really shitty way to go about trading. Now, this might be confusing to some of you guys because a lot of you guys know that I literally teach that you ought to put some trading rules in place to start your trading system off. Then, after you have those trading rules in place, something real simple to help you get into trades and control risk. Over time, what you're going to find is that you start to modify, update, augment, and change those rules to a trading approach that works perfectly unique to you. So that is why I don't personally use trading rules, because there are going to be certain situations in which those rules simply do not make sense contextually to implement. There will be other times where they make perfect sense and everything works out. But the ability to discern price action and to look at the circumstances and context of each trade that you take and decide right then and there, based on that individual trade, one trade at a time, what is best to do in the moment, that comes with experience. Today, I'm going to teach you a process for actually being able to do all this. So here's what we're going to do. We're going to go to the charts right here, and I'm going to start with this. I'm going to give you an example of a trading approach, right? You have a trading approach that says sell at resistance with a 1-to-1 risk-reward ratio, stop loss above the zone, and a target somewhere below the zone. I'm going to put my beautiful face up here. I know you guys are just really looking forward to just seeing me just yell at you this whole video. So we're going to go ahead and get started here. So when price gets to this zone, you may think, perfect, it's time to sell. So we're going to go here, we're going to enter a short position. Maybe you risk $100 on this trade. You put a stop loss above, you put a target below. You're anticipating something like this is going to happen. So you enter a trade like that, and then price starts going into profit for a second. Then it stops, for whatever reason, it just kind of stops. And then it starts going back up, and then it breaks the zone and hits your stop loss. So you look at this and you think, man, I followed all the rules, but I still lost the trade. This doesn't make sense, but whatever. I take the next trade. So price comes down here, starts pulling back. It tries to go up, tries to do something like this and break these highs. Then it kind of goes sideways, then it pulls back into this support zone. So then you think to yourself, okay, price is at support. Perfect. I'm going to buy. Everything's set up perfectly. It's come to a support zone. So my system says I buy at support, put a stop loss below, and put a target above. So you have your stop loss here below the zone. You have your target above. And then price, it tries to bounce for a second, but then it does something like this right here. Then it breaks and it goes down and starts throwing you out of the trade. Trading rules are a great way to start your trading approach. Something as simple as, number 1, wait for price to get to a clear support resistance zone. Number 2, enter a trade to bounce, to profit from a bounce of the zone with a stop loss above and then a target of a 1-to-1 risk reward ratio. 3, let the stats play out, get some data and get some experience such that you can then base your future trades based on that intuition that you'll start to develop after a couple months of seeing the same old boring shit happen over and over again. That's a great place to start because it gives you some structure. But long term, you're going to start to notice things. You're going to start to get these feelings like when you're following your technical black and white rules, but you get this weird feeling like, I don't think this trade's going to work out. But it fits the trading rules, so I got to take them. I'm going to trade the system. I'm going to trade it. And then it stops out just kind of like you thought it would. You thought you anticipated, this doesn't look like it's going to work out. But you enter anyway, and then it stops out. And you're like, this is weird. So then what you start doing is once a trader gets enough experience, they start seeing obvious shit on the charts. They start seeing that, price is in a hellish uptrend right now. Perhaps it would be better to not take a sell right there. Perhaps it would be better to maybe try to get into a buy because they actually think price is going to break out past this resistance zone, right? It breaks the rules. You're supposed to be selling at resistance, not buying near resistance for a breakout. Experience gives you that little sense of intuition, that subjective discretion that helps you make these decisions to determine whether or not what you should do in the situation should be one thing or another. Another thing, price goes up above here. It was in a nice trend. Then it broke out of that trend because we were making a bunch of higher lows. Price was trying to break out past this zone, but it failed. It broke those lows, came to the next support zone with a really, really big like bearish push into the zone, broke out of the trend that it was in because it broke past all the recent higher lows. And so the context would dictate that, you know what, the trend, like all support resistance zones aside, right? It kind of looks like the trend is kind of over because price is broken out of it, right? If it starts going back up, that's one thing. Then we can look to get into another trade. But price is kind of like pushed out of that upwards direction, and it's had a big bearish move down. And then if that wasn't enough, while it technically did come to the support zone, and technically your rules say you should buy because technically you buy at a support, sell at resistance, price gets there in a bearish move after breaking out of the trend, and then it starts going sideways and it tries to bounce over and over and over. But each time it tries to bounce, it just fails, keeps making lower highs before finally going below the zone and then breaking it. While your trading approach might say to buy right there, somebody who has some more experience might say, you know what, this doesn't look like the best trade because we've just broken out of like a pretty clear uptrend. We tried to break out here. If price was going to go up, it should have done it from up here. That it should have been the breakout there, but instead that failed, broke past all the previous lows, and it had a pretty big straight bearish move down. And then if that wasn't enough, it started going sideways, and it still wasn't finding any support right there. All these things come into a contextual, subjective, discretionary decision, which helps you say, hey, maybe it's not the best idea to buy right here. So you elect to not take that trade. And then what you may find is your win rate might increase from about 50% to maybe like 55 or 60%. You're still controlling risk. You're still getting out of losing trades pretty early, if they start to not work out. And then in your winning trades, you're not only holding them, but in a lot of cases, you can add to your winning trades while protecting your overall risk and not risking any more than you originally intended. And then you can literally make double, triple, quadruple what you make on your winning trades than what you lose in your losing trades. If you're in my free Telegram channel, which by the way, if you're not, it's the first link in the description of this video. We've got like 50,000 members in there so far. On Friday, I took 2 trades. One of them was a USD JPY trade. I bought here at the support and it broke below the support zone. So I stopped out on this. This was about $11,000 or $12,000 that I lost on that trade alone between 2 positions. Then I took 1 trade on Euro Canadian dollar. I risked 5K on this trade when it pulled back in here, started to bounce at the support level where price was at. And after it started to bounce, I got a little bit shittier of an entry way up here after the wick closure. But fortunately, this started going into profit. So on this one, while I may have lost on USD JPY like $11,000, $12,000, on this one, I bought here's a $5,000 risk if price were to break that zone. I would have only lost $5,000. But the profit was almost $25,000. I made almost 5 times on this what I was originally risking. Right, I could have made less, could have made more. I could have stopped out on it. There could have been a bunch of things that could have happened. But in this case, it ended up working out. This is why I don't trade with rules. Because the rules, if you're trading with rules that say, let me sell at resistance, right? Price would have come here to this resistance zone. I would have been looking to sell. Now, that's not always a bad idea, but it depends on the context, which is why I suggest, as you continue to evolve your system, yes, keep in mind what your trading rules are and use that to sort of develop your experience and intuition. That way you're making pretty predictable decisions, right? It's not that complicated. You draw a support zone, buy at support, sell at resistance, right? That gives you the data and experience over a couple months to start developing things like this right here, where price gets to a zone and you're like, technically price is at a resistance zone, but shit, it's been making higher lows and higher highs. It literally just looks like a straight freaking uptrend right now. Is that really the best thing to do? Should I actually really be selling right there at this resistance zone? In my case, no. In fact, I even took a buy whenever it pulled back, thinking it was just going to make a higher low and then continue up. And then I was able to profit from this trade while a lot of people were still selling here, and price had tested this zone 1, 2, 3. That was like the 4th time. You also learn other nuanced things. Like, for example, one of my things that I trade is I've said for a couple of years, the more a support or resistance zone is tested, the less likely it is to be respected. So whenever price goes and tests a support resistance zone a couple times in a row, It tested once right here. That was good. Tested here again, made a higher low. Tested here a third time, made another higher low, and then we start coming back. The more and more a support resistance zone is tested in a very recent amount of time with consecutive touches, the less likely it is to be respected. Normally, it's just going to like continue making higher lows and eventually break out. In my opinion, at a higher rate than it would bounce there after it's already shown evidence it's failed to bounce there at that zone. How do you figure that out? It's very, very simple. You get some experience seeing the same thing over and over and over again. It helps you avoid trades like sells at resistances that might not work and buys at support that might not work. It also is beautiful because it gives you a way of looking at a chart and then without even be able to explain or articulate or communicate why you feel the way you do, you will in fact feel like, I think this is going up. I think price is about to shoot up from here. And that feeling, though you may not be able to quantify it with metrics in your data, your journal, everything, that feeling is just intuition. It's a conglomeration of all your applied experience, which tells you, hey, dude, yeah, in general, we sell resistance, buy at support. But in this case, it might be best to not sell at this resistance because it just looks like price is going to break past. People may look at you like, hey, Jared, making up names here. Why do you think price is going to break past the resistance zone? Like, we're supposed to be selling at resistance, right? That's what happens. That's the common logic, right? And you won't even be able to explain it sometimes. You'll be like, I don't know, dude. I feel like it just feels like it's going to break past it, right? This will drive some people nuts whenever they're learning because they can't accept the fact that things are so unpredictable and that a lot of times your reasons and criteria for entering a trade are completely arbitrary. Meaning they appear arbitrary to other people, but to you they make sense based on your experience and the data you've collected as you go through your trading approach. I wanted to make this video to incentivize you and motivate you and inspire you to, yes, start with some black and white rules, not 10, 15, or 20, maybe just like 1, 2, 3 rules, something to just help you get into trades. If you click the first link in the description to follow my Telegram channel, you'll see how simple my trading analysis is. It is literally just pretty much horizontal support resistance zones with like a little arrow or a line going up or down to show what I think is going to happen. It is not that hard once you obtain the experience. So if you start, say for example, a really simple trading system that I help all my clients get started with is draw clear support resistance zones on the higher time frames, just the ones that are close to price. It's usually only 1 or 2 zones on the chart. Very simple. 2, wait for price to get to one of those zones and buy if it's at support, sell if it's at resistance, put a stop loss on the other side of the zone, and then just set the profit target for a 1-to-1 risk reward ratio, right? Just for getting started. Then 3, let the stats play out and then optimize it over time. What people start noticing is they're like, if I buy at support, have the stop loss down here and a target of a 1-to-1, I can normally get out before it actually hits that stop loss. So you end up taking smaller losses on your losing trades, or you end up just moving the stop loss closer. You also start noticing that, hey, if it moves to a 1-to-1 profit target, the next resistance zone is a little bit further up. I can probably just hold this a little bit longer. So then on that winning trade, instead of winning like 1 unit of risk, you risk $100 to make $100. You might have risked $100 to potentially make $200, right? But not every trade is going to yield that because not every trade would it make contextual sense to hold to a farther profit target. In a lot of cases, I close my trades before they even reach the 1-to-1 risk reward ratio because I no longer think it's as likely to go into profit. So I cut trades around break even, partial loss, partial profit, like maybe half of whatever the profit target was. And in some cases, like the trade on Friday that I took that I showed you on Euro JPY that I made $24,000 on, right? I made double what I lost on 2 positions on a losing trade. I made 5 times what I risked on that one specific trade and double with my total losses for that whole day on Friday. Why did I choose to hold Euro JPY that far? Well, I'd gotten a good entry on a lower time frame and I had put a stop loss underneath the previous low and support zone that price was at. So my risk was all controlled. It was all predefined. I risked about $5,000 on that. And then when it started going up, instead of taking profits at 1-to-1, I didn't exercise that rule. I made the subjective, discretionary, intuitive, experience-based decision to say, on the higher time frames, it looks like it's in an uptrend. I think it's going to go make a higher high at some point. So you know what? I'm just going to set an alert around the entry. So that way, if it gets back, I'll just probably close at break even. But if it continues up, this thing could really continue up a lot further and make a higher high because in the daily and 4-hour charts, it just appears to be an uptrend. It's just making higher highs and higher lows. So I opted to hold that trade instead of closing it in profit at 1-to-1 and instead of closing it in profit at the resistance zone, which was like a 1-to-2 or a 1-to-3. Instead, I made a contextual decision to just hold the trade. This is stuff that you will learn as you continue getting trading experience. It's stuff that you're going to start just noticing over and over and over and over, where when you've seen it 100 times, you can't help but get that weird feeling that just comes to you out of nowhere that says, dude, yes, it's at resistance, and technically your system says you should sell at resistance. I just don't feel like that's the best decision right now. I feel like I should just wait. Maybe it'll break past it and then pull back and touch it as support. And then buying might be a better idea because it just looks like we're in a really hot uptrend right now. It seems kind of like a stupid, dumbass thing to sell right now in the wake of this crazy uptrend, right? You're only going to learn that with experience. So that is why I don't personally have trading quote unquote rules. And this is the way that I think is the best for a trader to develop their experience. Start with some really, really, really simple, very broad rules just to help get you into trades and control risk. If you're keeping things simple and controlling risk, it means things are pretty predictable, sustainable. You do the same thing over and over again. And if you're controlling risk, you're never going to have a loss that's too big that you're not comfortable with. If you keep things simple and control risk, and you start with that clearly defined system with just 1, 2, 3 rules, then it allows you to build the experience to then say, all right, I know what the rules are. I know how to get myself into trades, but I also know when to manipulate the rules in such a way that I can exercise my discretion based on what the context is. Because in not every context and trading opportunity are those rules going to apply and fit perfectly. The only way you learn this is through experience. So my vote for you is that you just get that experience by having clearly defined rules, getting experience, and then knowing when to disregard those rules in certain situations. You eventually develop 6 to 12 months for most people who do get profitable. What I've seen is it typically takes 6 to 12 months, and that's just my opinion. I'm not saying that's a fact. It's just something I've noticed teaching people for the past almost 6 years. For the ones who do get profitable, they have their own specific trading approach. If you do get profitable, which you have, depending on what metrics you look at, you have a 10 to 30% chance of getting profitable trading. That's just what the metrics are, depending on which ones you look at. So we're going to cut that in half and say 20%. So 20% of you, 1 out of every 5 of you watching this video, are likely to get profitable. For most traders, it takes 6 to 12 months from what I've seen for the ones that do get profitable. And for some people, it takes years. But no matter what it is, you will eventually evolve into having your own trading approach that makes sense to you personally, something that's easy for you to duplicate, something that completely speaks from experience and intuition, something that you can open up your chart and within a few seconds you can look at it without even being technical, without even trying to overlay your rules onto the chart, without drawing any support resistance zones or lines or anything. You can literally look at a chart and then within seconds be able to tell whether or not there is a trading opportunity there for you. And that, my friend, comes with experience. So continue getting experience. You're doing everything right if you're continuing to get experience. Just do it in a predictable way with some simple rules and get that experience. And over time, what I've seen is a lot of people who approach it that way, they end up getting profitable. It worked for me. It's worked for thousands of people that I've taught over the past almost 6 years. And I think it's likely to work for you. Though I cannot guarantee you anything, and that is just my opinion, and that's based on my own subjective experience, just seeing it over and over again. That being said, I hope you enjoyed this video. If you liked this video, then do whatever you want. See you in the next one.